Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 16th day of July 2020, and this is the Daily Report for Gold and Silver. We had some moderate to strong downside pressure in the precious metals. Silver losing approximately 1.2% on the day, almost a full percentage in gold. Most importantly, taking the most active August contract below $1,800 per ounce. So we had former resistance become support for about a week, and the question is whether or not it will once again become support or convert back to resistance. In other words, is this a sign of the beginning of a correction or a one and done scenario? I tend to look at it as more probably a one and done. However, we have seen quite a rally and anything can happen. We'll talk about that in detail when we pull up our technical studies, but first to the price board. For the first time since Tuesday of last week, we saw gold futures break and close below 1,800, as well as the long-standing support trend line that we'll look at during our technical studies. Currently, we have August futures down $17.10, currently fixed at $17.9670. When we look at spot pricing, that sustained a drawdown of about 0.6% at $17.9670. You can see that the August month is slowly merging into spot pricing. Lastly, I do want to look at the October 1808.10, down $18 on the day. That will be an important contract month when we look at our overall strategy. Platinum lost about 1.38%, 831.60. Silver lost about 1.25%, 1951.5 cents, and palladium was the only precious metal traded on the futures exchange to buck the trend, closing up almost $8 at $2,017.90, and that was all with slight headwinds from a stronger U.S. dollar. GLD lost approximately 1% on the day, and silver, in terms of the SLV, lost about 2.15% on the day. Lastly, Nugget is higher on the week, but in terms of today's activity, lost 3.34%, $2.90 per share at 83.80. Let's take a look at our technical studies. Traders, we are looking at a daily candlestick chart, August gold. On this chart, we have a couple of channel lines. I have obviously added a channel line to include today's lower close. That is this close, and the channel line that we added was this one here, as well as an upper band here. The first question we need to ask ourselves is, did we cause major chart damage? And the answer is, it is a little bit too early to tell. My assumption is no. But if we have continued selling and break below this particular channel line, then we can make a case for the fact that we had a defined uptrend. And even though we had sideways action, the last three candles are distinctly a variation off of a three-river evening star. Although this isn't a long green candle here, the star hasn't gapped above the green and the red candle. It is very close to being a variation. So it is something that we want to be aware of. But all things being equal, if in fact we see a recovery, which is what I believe has a higher probability than the market sustaining a major sell-off, I would expect it to move back into this channel and then begin to move back up. What we want to see is if it continues to trade within a defined channel, because if it widens again, it really negates the possibility that the channel technical study is giving us good, valuable information that we can act on. What we do know is we have major support at 1760, and 1760 represents the series of tops that came in, and that is one of the critical reasons it is so important. The next level that we're looking at is 1800, and as you can see, I've labeled it possible resistance, possible support, because since Tuesday of last week, absolutely 1800 represented our support level. We clearly broke through that today. If we move back into that territory, then it will return to be support. However, if we get resistance and lower pricing, then 1800 could once again become support. The way that I try to describe it is one man's floor is another man's ceiling if you're living in a multi-rise building. So it's all a matter of where you are and how you are looking at the particular price point at the current time. We are looking at a shorter term 240-minute charts. This is also a chart in which we have been using channel lines. The original channel lines that I had in were this lower one here, as well as this upper one here. I have added an additional channel line which really begins from these lows. What is interesting is that that matches perfectly to the intraday low we had a few days ago, but absolutely it takes current pricing below even this resistance line. In that way, it is important on a short-term basis to see the market trade back up to 1800. If not, the various levels of shorter-term support that we would look at are at $1,790. Simply put, it is based upon this low here. And then again at $1,780. And that is based upon this low here. And then, of course, our major support, which comes in at around 1760. The question is whether 1800 will continue to be support or revert back into resistance. And traders, lastly, I want to take a longer-term view of recent gold pricing. And this weekly chart contains our upper-level forecast. I have not changed my numbers. I still believe we will see 1420, but here is the caveat in the question. If you recall from last week's discussion, a little bit this week, we talked about the fact that although we would see pricing hit 1920, it will not be accomplished as a single parabolic rise up. And so the question becomes, is this the point that we have a retracement? If in fact it is, we have put our stop low enough so that we should certainly weather any kind of major move. We've got it sitting at around 1760. And if in fact we did see the market trade to these lows, that would be my point where I would recommend for those that have the capital available that they add a October long position and then look for it to move back up before you liquidate the August. We've got a couple weeks left in that. And so based upon what we're looking at, the question is this going to be a corrective wave 2, or are we still in that first wave? If it is a corrective wave 2, we will get some sort of a correction. That will probably take us to about, I would say, 1880, because now we can calculate wave 1 and do a 0.618 extension. We would then get our last correction, or wave 4, before our final climb to 1920. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.